Snipers, you have to see what's happening in the Bitcoin price right now as we are back above 40,000 US dollars, testing the 100-day moving average as I record this video. But more importantly, we have yet to test 42,000. That's the major resistance inside of this range. We were expecting 42,000 to come on the table. I personally did not take another leveraged long position because of the fact that our weekly candle is still fully below its 20-week moving average. It's only going to take about 3% for us to get back above that 20-week moving average, and then we have all the time in the world to take long positions. But there's a lot more than that to talk about, snipers. Check this out. The 600-day moving average so far has been the exact support level that Bitcoin has bounced off of 3 times so far, forming higher lows. So this 600-day moving average is extremely important, and because we're a 4-dimensional channel, I went back and looked at the 600-day moving average against the money supply chart. Dating back to 2015, there have been 2 times that we have come below the 600-day moving average, but every other time that we've tested the 600-day moving average, it's been the best time to buy Bitcoin and throw it onto a ledger and hold on to it for 5 years, because this is an accumulation area for Bitcoin based on the history of the past. Now, check this out as well. The 2 times that we capitulated below the 600-day moving average was abnormal fundamental activity, like in late 2018 where we saw a miner's capitulation, we broke below the 600-day moving average, or in March of 2020 when we saw the BitMEX mass liquidations, we broke below the 600-day moving average. And so unless we're expecting something crazy and abnormal, we shouldn't expect Bitcoin to get too far below the 600-day moving average. Now, let's look at the charts, because I can sit here and talk all day about this. Smash the like button for the YouTube algorithm if you support this content. But let's look at the 600-day moving average. Against the money supply, we've actually had daily candles come below it. It doesn't look like the Bitcoin against USDT spot price, where we've stayed above it. Now, this is important to note, because when we go into the Bitcoin against money supply chart, which is the only chart that will show you the 600-day moving average dating back to 2015, what you'll notice is, just like I mentioned, the only time we came below it was in March of 2020 during this was during the BitMEX mass liquidations. And so before that, the 600-day maintained itself as a major support, with Bitcoin bouncing up multiple times, even sometimes seeing over 40% upside from this area, bouncing from the 600-day moving average. And so it's always been a good time to buy Bitcoin, throw it onto your ledger at the 600-day moving average. Now, if we go into 2018, yeah, we were below the 600-day moving average, but once again, we stayed above it, and then there was something abnormal, like the miner's capitulation, that brought us below it. Every time we've come below, it's been with a massive, decisive capitulation candle. We have obviously not seen that, and I personally do not expect that based on the revolving parts we'll discuss in just a second. And so the 600-day moving average, we've never come and tested. That's why it's not on most people's charts, right? Even dating back to 2015. Check this out. Interesting, right? We had a cup of coffee just below it, and then as soon as we got above it, we broke out and never came back below it before forming new all-time highs in 2015. Why is that important? Well, against the money supply, it's quite clear that institutions are watching the 600-day moving average, because it only took one daily candle to not show any aggressive sell-off below the 600-day moving average for now us to get back above it. Our daily candle today is not only above it, but also below it. That's why we're talking about this. It's super important. We get a full daily candle back above it. Now we're starting to see the early signs of momentum. Now, what we really need to do to get more confident, and that's why I personally did not take a leveraged position again here, is because we're still fully below the 20-week moving average. 43,000 is super important right now, not just because that's where the 20-week moving average is sitting, but let's look at a fresh chart of Bitcoin. And remember this channel that dates back to 2020. And why is this channel important? Remember when Bitcoin initially came above 10,000 US dollars, we were below the midpoint of this channel. And then as soon as we got above the midpoint of this channel, we broke out to new all-time highs. And then we came and tested the midpoint as a support in July of 2021. We held above the midpoint of this channel and then new all-time highs. Well, guess what? This time we came below the midpoint. And so we've slowed down. We've rejected this channel as a resistance. This is how we predicted the recent move to the downside. Remember, I said there is a bearish puzzle piece that we are rejecting potentially the neckline of this head and shoulder, which is showing confluence of this channel resistance. And that's how we predicted this downside move. Well, guess what? We are now below the midpoint. And guess what's also there now? The 20-week moving average. So we get above 43,000, which is only 4% away. We can go on our merely way of taking long positions again on leverage. Now, being at this 600-day moving average, I've been saying this since Bitcoin came down and tested 34,788. It's always been a great time for the long-term positions to come in here. The accumulation is obviously at the 600-day moving average. And so it's never a bad idea to get some Bitcoin and throw it onto a ledger and forget about it for 5 years at the 600-day moving average. That's quite clear. We took a long position at 39,000, 37,000. And so we've been buying this dip up, right? But now we have to realize that Bitcoin is at a critical area where we just need to get back above 43,000 to gain momentum. What's also interesting about all of this, and I'll go into the revolving parts actually, I just want to say this though. Unless we're expecting something abnormal, something crazy to happen, like the miners' capitulation or like what happened with the mass liquidations on BitMEX, then we shouldn't necessarily expect us to get really far down below the 600-day moving average. Now, let's say we do see a downside scenario. Maybe we see a rejection of 41,950 or even the 20-week moving average at 43,000. We might even see some short positions come on the table. Well, the only downside I would expect for Bitcoin is to just come back and form a higher low because of how strong we've been fundamentally and the fact that revolving parts have not fell apart. I am always going to be keeping the bullish scenario on the table until we get confirmation otherwise. And so even if we come down, we can even get down to 34,788 and still be above the higher low from February 24th. And so in any case, I do not see us moving far below this range unless we see some of the revolving parts that I'm going to mention right now fall apart. And one of those is the Ethereum to Bitcoin chart. We are clearly still showing strength with the Ethereum to Bitcoin chart. Unless and if the Ethereum to Bitcoin chart falls apart, this is still a very bullish puzzle piece for the overall market, including altcoins outside of Ethereum, to see continuation of the upside, including Bitcoin as well, because that would drive Bitcoin dominance down, which is good for Bitcoin's price. Now, check this out. Everyone's talking about the DXY, right? It moved above 100 recently. We're seeing a little bit of a garden variety pullback today, testing its weekly open, which is explaining some of the upside in the market. But everyone's saying, okay, what if the DXY does something crazy, right? We saw US oil do some crazy stuff over the last 2 years, going from $0 to over $100 a barrel. And so what if the DXY actually decides that maybe it wants to breach above the 2020 highs, right? That would be abnormal because right now we have to expect if we're going to be forming a lower high, it's going to come on the table very soon. That's going to bottom out the equity markets and Bitcoin, and we'll see price discovery continue. But if we break above this, that would be abnormal. Now, we're not going to get a confirmation of that for a while. There's a lot of room left for the DXY to just form this lower high. But this is not what we want to see, right? This right here would actually be a concern if the DXY pushed above the 2020 highs. Now, guess what? The Euro to USD chart is actually in a position right now to give us an early indicator if we're going to be seeing abnormal activity with the DXY as it's testing its lows. And just like we talked about yesterday, every time the Euro to USD chart, which is inversely correlated to the DXY, has reversed from these lows, Bitcoin has moved into new all-time highs. And so we're expecting this. This would be abnormal for us to break this support for the Euro to USD. So as soon as we start to see 1.08058 start to break, then we have to be cautious of an abnormal move. But until that happens, and if that happens, I stand with the bullish side that we are ready to see momentum to the upside. The puzzle pieces have not fell apart yet. If we look at the Ethereum to Bitcoin chart, we're still strong. The DXY is approaching resistance. If the Euro to USD gives us an early confirmation of abnormal activity to expect with the DXY, we'll flip it into a bearish puzzle piece. But those are two bullish puzzle pieces. The total market cap testing 1.782, as we talked about yesterday, that was a major support level. We didn't breach below it. Still very bullish. If we look at what's happening to Ethereum to US dollar pairing, we're also seeing strength there because of the Ethereum to Bitcoin chart. So the point is, snipers, right now we're at a very critical place. Bitcoin is playing inside of the range with a resistance of 42,000 and a support of 38,000. If we can start getting hourly and 4-hour candles closing above 43,000, then we could resume our uptrend. It would get us back above the weekly open, get us back above 42,000, and most importantly, above the 20-week moving average. Until then, let's continue to expect this range between 42,000 and 38,000 to be where Bitcoin wants to have its cup of coffee. And at any point, if we get back below the 600-day moving average, I think we have to really keep these lower levels in mind as a potential test for another higher low down to 34,788. But I do not, at this point, see anything to justify Bitcoin is ready for further downside below the recent lows that we've already created. And so unless we start to see puzzle pieces, I guarantee you, outside of Bitcoin fall apart, I will address a bear scenario. But until that happens, we maintain a bullish bias. And I'm always providing you the unbiased opinion, right? We knew that we were testing a resistance at 45,000. It was that neckline. And so there was that potential of a dip, which we're seeing right now, but we're not seeing things fall apart yet. And so things are either ready to rebound or are ready to continue to the side. I don't see things to justify that we're ready to see a capitulation like we saw in late 2018 or even in March of 2020. That 600-day moving average has always held us strong. So I'd love to hear you guys' thoughts in the comments below about the 600-day moving average. I know this was a little bit of a different video, and smash the like button for the YouTube algorithm if you support this content, and I'll see you guys next time. If we break below that 600-day moving average, I will certainly get a video out. But remember, 38,000 is the major support in this range. If we get above 42,000, as long as we can get hourly and 4-hour candles above 41,950, I'll get a video out. But most importantly, that 20-week moving average at 43,000 is what we're going to be waiting for to resume leverage long positions for Bitcoin. We've already taken positions on altcoins because they've been sold off quite heavily. So this morning we took some long positions on altcoins, expecting this bounce. We knew it was coming. We knew Bitcoin did not test 42,000 after breaking below it. So it was certainly highly probable to come up and test it, which we're doing right now. But we have to be cautious because we could be seeing shorts come in around those resistance levels as Bitcoin is still below its 20-week moving average. So the overall macro bias is still slightly bearish, but 4% away, that 20-week moving average, it won't take much time for us to get above it. And then once we're above it, we have all the time in the world to take those long positions. So thank you for tuning in today. Until next time, snipers.